In this video, I'm going to show you the real, little-known secrets of support and resistance that I use myself to really know if the market will turn or keep going. And you're going to see that everything that you have ever been taught about support and resistance can be proven to be incomplete. So before you buy a special indicator or a software that's supposed to tell you when to buy and when to sell, or buy the latest trading strategy that's supposed to tell you when to enter and when to exit trades, consider becoming one of the few traders in the world who take the time to notice the real reason that the market would continue or turn, and consider becoming aware of the real reasons why most traders are not able to make the leap to actually believe these simple known truths about the market, truths that the market itself reveals over and over again. Okay, I guarantee that you will learn a lot more by watching this video. And to make sure that you agree and appreciate learning these professional confidential strategies for free, just hit the like button right now. Support and resistance is one of the most critical sources of information on when you should buy and when you should sell in trading Forex, gold, stocks, commodities, crypto, etc. But in almost all the training and demonstration that I have ever seen, the way that support and resistance is taught in the trading world and used in trading does very little to increase probability on making trading decisions to enter or exit trades. It seems almost like trading blind, using something that is almost irrelevant, like you're just falling back into the flipping a coin routine. Many traders believe that because they can see the logic and reason of certain levels that we know of as support and resistance, that's all they know, is that the market just bounces back and forth between support and resistance. And that's not what financial markets do, and you can see this for yourself the first day that you look at charts. It doesn't just go back and forth in between support and resistance. But because many traders believe that they have something that they can grasp onto, the logic of it's going to this level, it's going through or not going through, it's going to this level, it's going through or not going through, and that gives them some kind of a thing to focus on to kind of guess what the market is doing. And they believe that that will give them a higher probability in trading. And I would say perhaps it does. It does. Just support and resistance alone can help to increase your probability to a little more than 50%. And as many traders are explaining in their own training programs, it helps it to rise to about 60% probability. That in many cases, if the market goes to this level of resistance and then it appears to go through or does one of these things that confirms or doesn't confirm a turn or a continuation, that entering because of that can increase your probability to about 60% probability. But it's possible that if you use this information of support and resistance with some other key knowledge that comes from seeing it on the charts, knowledge that comes from the market itself. The market itself shows us things that we can prove and test are true, that using it together with this knowledge can skyrocket your probability. And it can easily make your probability go to 70% or more. So I've noticed that it's fairly popular that price action trading is the thing using support and resistance that can enable a trader to increase probability to just a little bit more than flipping a coin, a little bit more than 50%, and can move that probability to around 60%. When you use discipline, when you use risk management, and you're consistent with that method. But if you prefer that you would actually be able to see some things that are true about the market that would increase your probability to 70% or more, and have that be based on something that you can see for yourself is scientifically provable, then what I'm about to show you is going to enable you to actually do that so that you can now increase your odds to the level that you have always wanted it to be. You want to know how some rare professionals are able to trade so well? It's not from just focusing only on support and resistance. You may be able to increase your account if you're really good and you have some great discipline and risk management. But if you want something a little bit more than that, you need to see some things that are true. Pattern recognition is something that can be scientifically proven to be true. And how does it work is you prove it to yourself by seeing it repeatedly and recognizing it based on your own experience. And because of that, from your own experience, you can know the approximate probability that a pattern is about to repeat. Repeating one of its known and cataloged patterns. There's this pattern, this pattern, this pattern. And they've all been known and cataloged, some of them for a long time. You can put a picture of it. You can find them in a textbook. You can find them on websites that know about patterns that have been proven. It's great to be able to see patterns that have been known for decades. And some of it's not like that old, but some of our forefathers in the trading industry have known about these patterns for a long time. And it's a great thing to give honor and respect to the people who have discovered these things before and said, look, I found that this is something that repeats itself. And it's even better when you recognize things through your own experience. You know, if you're involved in trading the financial markets, to me, that means that you are on a quest to discover what's true about the financial market. Not take someone's advice about what's a trading strategy, do this, or when an indicator crosses this, enter, or something like that. It's to discover for yourself things that are true about the market and know that that's true. I've seen it and I've seen it repeated. I can recognize it now. When it does it in the future, I can know, oh, that's doing it again. Here it goes. It's doing it again. Many traders now have been taught to focus on support and resistance, especially in the field that I believe is erroneously called price action trading. Traders are taught to more or less blindly put their emphasis on horizontal areas of price that could represent support and resistance because this was a place where the market turned in the past. Therefore, maybe it will pause or turn there in the present. Since many traders have no understanding about what financial markets actually do, and a lot of us have been taught, no, you can't know that, or they may have core beliefs that cause them to believe, I'm not authorized to know that. I'm not authorized to be able to read the market and tell if it's turning from seeing it, or I'm not good enough. These are core beliefs that may stop you. I'm not worthy, or I'm not good enough, and that's another subject for another time. But believe me, core beliefs do affect how people trade. Just as Mark Douglas speaks in his book, Trading in the Zone, traders trade their beliefs. So if your belief is, I'm not good enough, I'm not worthy, and that's a core belief that you don't consciously believe, then that will affect how you trade. So why is it that many traders can be shown the market does this, and then they believe, well, I'm not authorized to know that. You're showing it to me, but I can't know that, so I'm going to block it out. Or I can't really practice and actually experience that that's true for myself from the market, which does it every day. I can't do that. I have to just blindly follow what someone else has told me as a strategy instead, and then just mechanically follow that because I'm just a machine. And what I really would like to do is just become a robot. But that's not the way that it really works. You know that human beings can trade a far better than any robot, and I can prove that to be true. So by taking these areas of support and resistance, we can look at the market in terms of that and just kind of blindly think, well, if it goes to this level, if it turns at that level, that means it turns. If it gives the confirmation signals that it's going through that level, then that means that it's going through. And flip a coin and you can see that, well, that does kind of increase probability a little bit. So let's take a look at how you can see this work in the real market. So if I just take a chart, and this can be done on any pair or equity and on any time frame. If you just mark some obvious places where the market has turned and then move forward in time, and this is all relevant to the time frame that you happen to be looking at. So notice when I get to here, these are already marked because that was in the past. So support becomes resistance. True. Resistance can become support. That just shows that it's a significant area. Total and complete emphasis on areas like that blinds people from being able to see things that are far more important. For instance, when the market is in a trend, if people are putting their emphasis solely on support and resistance, but they're not paying attention to the type of price action that's being formed, then that will blind them to things that are far more important. For instance, the first thing that you have to learn is that the market forms trends, and it forms counter trends or corrections which have a different type of price action. When the market begins forming a trend, this is a trend right here. It will just go through all support or resistance. So here's the most significant area of support back here, way before this trend formed, but you could tell that it's just going to go through it because it's a trend, and trends always do that. If you thought that this trend is going to stop in the middle at support and resistance, that's not going to happen. And if you keep on thinking that over and over again and never see what a trend does all the other times every day of your life, then you're missing something that's kind of important. During a correction, the market normally goes past support or resistance, ignores it like it doesn't even exist, and then it turns usually at a place that isn't support or resistance. So then you don't know that it's turning because it's not at support or resistance. This is a trend. This is a correction. That's what keeps happening over and over again. This is a trend. This is a correction. See, it's at a place that's not previous support. Now, if I go back further, it's possible there may be some support or resistance way back in the past there, and is coming back to that point. But that's not what's important. That's why when people have a trend and then they look for the place where it's going to turn, they often look at Fibonacci. And I've proven in other videos how, Fibonacci is kind of interesting, but that's also not what's important. It will turn at places that aren't Fibonacci levels many times. And you can have multiple currency pairs that are correlated, and some of them might be at Fibonacci levels and some of them might not be. Does that mean that we can't tell if it's turning? Or is there something more important than that that shows us when something is turning? Absolutely there is, and that's what I've been teaching for the last 16 years. If you can just recognize known shapes that the market always forms, it can tell you if something is going to turn or be more likely to turn versus if something is more likely to keep going. If you can learn to actually read the known shapes and patterns that financial markets always do day in, day out, and they're forming on all time frames, pretty much for all different currency pairs and equities that you could look at, including stocks, commodities, oil, gold. They all have these patterns on them. And if you can learn to read them and recognize them, as I have emphasized before, that this is like the language of the market. And then some people thought that the language of the market was some kind of a strange, mystical thing, but it's actually very simple. It's just like, as I often mention, as first grade students learn to recognize the shape of the letter A. How can you not go to first grade and learn what the letter A looks like and what it means? Well, this right here is the shape of a classic trend. Now, in the language of the market, this may be one letter out of 25 or 26 letters. So you can learn that, but that doesn't mean that you know everything. But if you do know that, you will be able to recognize, there it is again, there it is again. So what happens with the support and resistance? It breaks through resistance and then turns. So if you're focusing on support and resistance, you can't see that's a wave 3. And then you think that it's going to go after that. It will go and then it will turn. And then what does it do? It makes the shape of an ABC, as it always does. Heck, how can you not see that after you've been watching markets for a while? So whenever you see, whoa, there's that shape again, it breaks through resistance and then turns. So, if you're sitting here thinking, oh, here comes a great trade, it's breaking resistance, but you can't see there's a wave 5, and that's what the market has been doing day in and day out, nonstop, forever, and you keep looking at the market every day and you think that it's going to go because it broke resistance, wouldn't it make more sense that you would learn to recognize these known shapes? Because that's far more important, and it overrides support and resistance. Okay, so you can know now about support and resistance and know the significance of it. Also, past support and resistance and how it may become future opposite resistance or support. And that's very nice and that's very useful, but it's far more important to be able to read the shapes that the market makes. Then you can actually see what it's doing. So if you got a little bit out of this is just the beginning. I'd love to show you the whole thing as much as possible on a daily basis on real charts for real-time trading. And if you'd like to know more about this, if you felt like you did get some benefit from this, just go to our website and you'll see that there is this free professional trading course. That's what I offer to people to help them to get started. And there are at least 40 different training videos that are sent out for free in this course. So it has a lot of information in it. Yes, I do have live trading sessions every day, and that's not included for free, but this is a great place to start, is to start with our free training. So if you saw what I mean, or if you didn't see what I mean, just leave a comment below and I'll get back to you on that. Meanwhile, I have made some other videos about this very subject and you can watch them right over here.